The price of cryptocurrency Bitcoin, one Bitcoin, crossed $100,000 in value in recent weeks. In June, US President-elect Donald Trump had said that he will create a strategic reserve of Bitcoins for the US if he's elected to power. What does all this mean for this cryptocurrency? Is 2025 the year when it will finally take its seat at the investors' table? Let's take a look. Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. Before we delve into the details for this particular episode, let's just take a look at how cryptocurrency is difficult from your physical currency. A cryptocurrency is a form of digital currency that individuals can use to transact among themselves. They are like physical currency, except that a crypto does not need a central authority, such as the government or a central bank, to certify its validity. Just to give you a real world example, the value of a 20 rupee note, Indian rupee note that you hold in your hand, is worth that much, rupees 20, because the RBI governor guarantees it to be so. Without that guarantee, that note, the currency that you hold in your hand, is only a piece of paper. Whereas a cryptocurrency is valued for as much as people are willing to pay for it. Let's take a look at how the ecosystem for cryptocurrencies has been changing gradually, or rather their acceptance or the way governments look at them in recent times. Historically, governments have not favored any currency that does not have that authority or backing and have not looked favorably at any currency that they cannot monitor. But in the campaign trail that Donald Trump had in June, he promised to create a reserve, a strategic reserve of bitcoins, promising to buy up to 1 million bitcoins over a 5-year period should he be elected. And sure enough, he's the president-elect now. With Trump's successful bid against Vice President Kamala Harris, SEC Chairman Gary Gensler is set to resign on Jan 20th. Gensler has been largely critical of cryptocurrencies, so his moving out may allow Trump to bring in someone who is more open to creating a framework to hold cryptocurrency assets. His appointee for the Treasury Department, Scott Bessent, has been openly supportive of cryptocurrencies, and he believes they could play a positive role in the US economy. Early in 2024, the US Securities and Exchange Commission, or the SEC itself, allowed ETFs for bitcoins, or exchange traded funds. In less than a year, the 25 odd US based ETFs now hold just above 5% of all bitcoins, or above $100 billion in value. In an article earlier this month in Business Line, a sister publication, my friend and colleague Hari Viswanath argued that bitcoins, and in general, hence any form of cryptocurrency, are neither a store of value nor do they help in transacting business. Here's why. He said that the common man or woman is still totally untouched by bitcoins. With just around 11 million monthly active Bitcoin users, almost the entire world is not even remotely using bitcoins to make payments or transact on the internet. Maybe except for a small ecosystem that also includes criminals, he points out. This, he argues, is unlike any other true innovation that has taken place if you look at a time horizon of the past 15 years. For example, the internet, within 15 years of being introduced to the public, notched up 1.5 billion active users. This gives rise to the question, what true purpose does Bitcoin, or for that matter any other form of cryptocurrency, serve? This is best answered in an April 2024 note put out by JP Morgan that asks whether cryptocurrencies can finally play a serious role in an investor's portfolio. The authors say that cryptocurrencies have come up short so far, even as a currency. They point out it is neither an effective store of value, as evidenced by the incredible price appreciation, nor an effective medium of exchange. It is rarely accepted in retail transactions, and while a legal framework might help to improve this, the volatility of most crypto tokens will still keep merchants wary. It is therefore better to think of cryptocurrencies as an asset. But cryptocurrencies have acted in the same manner as equities and bonds, especially in their reactions to interest rates over a 3-year period till April 2024, the authors point out in the note. This makes cryptocurrencies a poor choice for the sake of diversification. Now comes the next question. Can you generate income if you hold cryptocurrencies such as Bitcoin? The answer is no, and that is a pet peeve of globally renowned investor Warren Buffett against cryptocurrencies. He says if you buy a piece of farmland and along comes a law that says you cannot buy or sell farmland anymore, you're still comfortable because you can generate income from the agricultural produce that you generate from that farmland. If you buy an apartment, you can either live in it and save on rent, or you can rent it out and generate income. But with Bitcoins, there is no generation of income as long as you hold it. You just buy it at a certain price and hope that at some future point another investor comes along and buys it from you at a higher price for whatever reason. In the same Business Line article we referred to earlier in this episode, author Hari actually refers to Bitcoin purchases as speculation and not investment. But all this may not prevent the craze around Bitcoins and other cryptocurrencies from intensifying this year. An article by the Motley Fool published by Nasdaq.com in early November talks about a likely arms race for Bitcoins after Trump's announcement of his intention of creating the strategic reserve of Bitcoins. The article cites Trump's promise to create a strategic Bitcoin reserve that will buy 1 million Bitcoins over the next 5 years. The authors explained that conceptually, a strategic Bitcoin reserve would be much like the strategic petroleum reserve that most countries have, only that it would contain Bitcoins instead of petroleum. Owning 1 million Bitcoins, equivalent to about 5% of the current circulating supply, would make America a Bitcoin superpower, as Trump claimed in his campaign trail. Other nations would likely need to follow suit, the authors point out, and that has raised the interesting possibility that China might be forced to roll back its crypto ban, which has been in place since late 2021. If China also reverses policy and starts creating a Bitcoin reserve, like central banks built gold reserves, we could see a monster incoming Bitcoin rally, the authors predict. When governments follow a certain path, sovereign funds can't be far behind. Though nothing has been confirmed yet, there are reports that show that rich nations like Qatar, Kuwait, the UAE, and Saudi Arabia have been adding to the count of Bitcoins held by their sovereign funds. And that brings us to this nugget of information section we have for you weekly. Did you know that Bitcoins have a hard stop at 21 million? Which means that beyond 2040, when that number is expected to be reached, no more Bitcoins will be produced or mined. Here is the answer to last week's question, and the question was, when was the first call from a handheld mobile device made? The answer is, it was in 1973. The call was made by Motorola's Martin Cooper. He made the first phone call from a handheld mobile device while on the streets of New York to his competitor in Bell Labs. And here's this week's quiz question. Who is the creator of Bitcoin, and why did he or she decide on 21 million Bitcoins as the final count, as a hard stop? That's all we have for you folks in this episode. If you like this episode, do not forget to like, share, or subscribe. Till we meet again, have a lovely time ahead, and here's wishing you a wonderful year ahead.